Hello and welcome back to Core Finance. I am Matt Brown. I'm joined by Alessio Rastani, who is CEO of Leading Trader. How are you today, Alessio?
Thanks for having me. Good to be here.
Always a pleasure. Look, we're going to do 3 videos today, so this is one of 3. And starting off, we're looking at the S&P.
Yeah.
What next for the market? I mean, it's been onwards and upwards, but is this about to change?
Yeah, so one of the hardest thing to do is, trying to make calls on what's going to happen next in the stock markets. But what I like to do, whenever I make forecasts, I like to look at 3 things. Number 1, obviously the technicals, the charts. But something that many people don't look at is seasonality. So we're going to take a look at seasonality and what that is in a few moments too. And the third thing I like to look at, okay, so here it is, yeah. And the third thing I like to look at is also like to look at what the insiders or smart money is doing, because that's the third thing I look at. But
okay, just to pick up, insiders isn't people in the know, it is smart money.
Yeah, smart money.
The long-only funds, the not the kind of
Not
speculative.
Exactly, well done.
Just
Correct.
for our viewers.
Absolutely right, yeah. So let's just take a look at the seasonality of the stock market. So now you will see that generally the trend, and for folks who don't know what seasonality is how the stock market usually behaves in different months of the year. So we know, and I think most folks will probably agree, that September tends to be one of the most volatile periods.
Fact, yeah.
Yes, it is.
Fact.
August also tends to be a rather negative month, purely because it's a very low volatility month. Sometimes, on the other hand, like we've seen in 2011 and 2015, August has tended to be very volatile, mostly because traders in August go on holiday. Most folks who are in the financial industry take their vacations. And usually the last week of August, which is what we're in right now, the last week of August is the lowest volatility or volume month on record. So this is going to be probably a very sideways, boring week for the stock market. But we're going to head to September next week. I don't expect anything interesting to happen in the first week. Second week of September, yes. So history tells us September tends to be a rather negative month. It doesn't mean the markets are going to crash or anything like that. No, it just means that it probably has a bearish bias.
And can that be down on the fundamental reasons that a lot of US companies are in the third quarter? It's usually a bad quarter for them to report, and they kind of get everything out the way to end on a good note for the final quarter for the year.
Absolutely, earnings season will be coming as well. There's a lot to do with that. But going just to the next chart of the stock market, so the chart of the stock market itself, the S&P. So one of the things I look for divergences, I look for the general trends, support, resistance, and of course Elliott waves. And again, I just talked to you a bit earlier about Elliott waves. People's reaction to Elliott waves is either a scoff, like, oh, come on, or they love it. So I do love Elliott waves. I was a skeptic at first, but I do like looking. But just generally looking at this chart, we're still in an uptrend. There's no doubt about it. The uptrend still is in place. And I like to say, always keep things simple. And by that I mean is this. The support level, Matt, as we can see, is 2,400 in the S&P. That's the key support on the S&P. And as long as we're above 2,400, the bias still remains sideways to higher on the stock market. Now we had some negative divergence as we see earlier in August. That divergence I think is going to now complete it. We had to pull back the ABC correction. We had some time resistance, something I keep an eye on. That again coincided with the top, as we can see on the S&P. So where are we heading next? Well, I think given the fact that we held that trend line, we held a nice trend line there. We're still above 2,400. We held 2,420. Potentially, I think that we're going to see another retest of 2,490, the previous highs we formed in August. I think we'll have another retest of that. And then we'll see what the stock market will do. Either we're going to close above that level, which I think is unlikely in September, generally because of the bearish bias. But I think a more likely scenario is we'll probably retest that level and then head back down to the August lows. We're going to retest that again. So if I was looking to trade the S&P, I'd be looking to find shorting opportunities around the previous highs of August, around 2,490 to 2,500, that level. And then look for another move down to the August lows. But again, I don't expect anything major. And I don't expect a
crash or a major correction.
Or indeed a major move up in September. But I will say this. October is the month to keep an eye on, especially if you're a bull, if you're a stock market bull, and if you're looking to buy stocks, keep an eye on in October. October will find you the best opportunities, and again, we'll come and do another segment on that near the time. But that's what I got. As long as we're above 2,400, keep it simple. As long as we're above that level, the bias is sideways to higher on S&P.
And just finally, the VIX, we talked about volatility.
The VIX, yeah, the volatility.
That's an interesting trade. If you're already long stocks to protect yourself, if you do see volatility, but don't want to short the market, maybe look as an insurance, trading the VIX.
Exactly. So again, since September tends to be a bearish period, yes, you can use the VIX as a contrarian indicator. So if the VIX falls very low, then use that as a contrarian signal to short the stock market. So yeah, absolutely right.
Fantastic. Alessio, thanks very much for joining us.